All right, so when you think about the big players in India's investment scene, who comes to mind? Probably names like HDFC, SBI, ICICI, right? The usual suspects. But what if I told you there's this invisible giant working behind the scenes, a company that's basically the central nervous system for almost the entire industry? Today, we're going to pull back that curtain. You see all the logos of the mutual funds, you track their performance, but have you ever stopped to think about who's actually handling the nitty-gritty when you hit that invest button? Who's making sure your monthly SIPs go through, sending you those statements, and just making sure the whole thing doesn't fall apart? Spoiler alert, it's not the fund houses themselves. It's a company you've probably never even heard of, but one that is absolutely critical. So, just how critical are we talking? Well, get this. A single company handles the back office for nearly 70% of the entire Indian mutual fund industry. I mean, just let that sink in. 70%. That is an absolutely staggering level of dominance. It's basically a quiet monopoly, just hiding in plain sight. And that company's name is CAMS, C-A-M-S. It stands for Computer Age Management Services. So, for the next few minutes, let's dive deep into this hidden engine and figure out how in the world it became the indispensable backbone of India's entire investment world. You know, the best way to wrap your head around what CAMS does is to think of them as a financial plumber. Seriously, you don't see them, you don't really think about them, but if they suddenly stopped working, oh boy, the whole system would grind to a screeching halt. They handle all the messy, complicated, but absolutely vital pipework that connects you, the investor, to your mutual fund. Okay, so the official fancy term for what they do is a registrar and transfer agent, or an RTA. But what does that even mean? Well, simply put, their job is to be the ultimate record keeper. They make sure that every single transaction, every unit you buy, every rupee is tracked with perfect accuracy for millions upon millions of investors. And I mean every step. From the very first moment you sign up and do your KYC, your Know Your Customer verification, CAMS is right there. Look at this list. They handle the onboarding, all your transactions, your SIPs, your purchases, your redemptions. They maintain your accounts and your statements. They even calculate the commissions for financial distributors. They literally manage the entire life cycle of your investment from start to finish. There's this fantastic analogy from an investor on the Value Picker forum that just hits the nail on the head. The mutual fund, that's the heart, right? It's making the big decisions on where to invest. But CAMS is the entire circulatory system, the arteries, the veins, everything that makes sure the money flows where it needs to go. The key takeaway here, one simply cannot function without the other. So, that begs the question, how does a company build such an unbelievably dominant position? Well, in the investing world, we call this a moat, a set of competitive advantages so strong that it's almost impossible for a competitor to breach their walls. So let's break down the 4 key pillars that make up CAMS's fortress. First off, just look at the market itself. It's a duopoly, plain and simple. You've got CAMS with this massive, nearly 70% share. Then there's K-Fintech with most of the rest. And after that, pretty much nobody. This is not a market you can just wake up one day and decide to get into.
And this right here explains exactly why it's a duopoly. First, the switching costs are insane. Can you imagine a fund like HDFC trying to move decades of data for millions of investors to a new provider? It would be a nightmare, incredibly risky and disruptive. Second, their huge scale means they're super efficient. They have economies of scale that no one else can match. Third, we're talking about proprietary technology they've been building and perfecting for over 25 years. And finally, trust. The average relationship they have with their top 10 clients is over 18 years long. You put all that together, and you've got an almost unbreakable hold on the market.
Okay, here's another brilliant analogy to help understand their pricing power. It's like Fevicol. The fee CAMS charges a mutual fund is a tiny, tiny fraction of that fund's total expenses. It's just like the glue you use to build furniture. Yeah, it's absolutely critical and it does a fantastic job, but it's such a small part of the total cost that you would never risk the whole piece of furniture by trying to save a few rupees on a cheaper, less reliable glue. It just doesn't make sense.
All right, so we've established they're totally dominant. But how does that actually translate into financial performance? And maybe more importantly, where's the future growth going to come from? Because this isn't just a story about a boring old utility company, it's a story about expansion.
So if you look at their revenue, yeah, the mutual fund business is still the king, making up about 86% of the pie. But look at that smaller slice, the non-mutual fund business. that little piece of the pie is where some of the most exciting stuff is happening. And when I say exciting, I mean it. Over the last 5 years, these newer, non-mutual fund businesses have been growing at a compounded annual rate of 28%. What CAMS is doing here is genius. They're leveraging their core tech and the trust they've built to move into new, fast-growing areas. And these aren't just little side hustles. We're talking about a real payment services business with CamsPay. They're becoming the go-to administrator for alternative investment funds, or AIFs, which cater to the super wealthy. They're expanding their KYC registration agency, and they're even building a central hub for all your insurance policies. Every single one of these is a potential major growth engine on its own.
Okay, but let's be real. No business is perfect, and no company is without risks. When you have a market position this dominant, it's naturally going to attract scrutiny and pressure. So, what are the key concerns that investors are watching when it comes to a company like CAMS?
This quote really gets to the heart of the skeptical argument. Isn't this just a tech-enabled BPO? In other words, is CAMS just a glorified call center or back-office service provider? Because if it is, well, why should it have high valuations? Shouldn't it face constant pressure on its profit margins? And that leads us right into the single biggest debate around CAMS: pricing pressure. The fear is that the huge asset management companies, the AMCs, will use their muscle to constantly push for lower fees. But CAMS management has a strong counterargument. They say they've pretty much reached a stable point. Their value proposition isn't just about being the cheapest. It's about being the most reliable, the most innovative partner who takes all the operational headaches away from their clients. It's a service, not just a cost. And beyond just pricing, there are a few other things to keep an eye on. Their revenue is pretty concentrated with just a few top clients. Their entire world can be changed by new regulations from SEBI, the market regulator. And since their fees are linked to the total assets under management, or AUM, a big market crash would hit their top line directly. These are real risks.
So, when you take that whole picture into account, the incredible dominance, the new growth avenues, and the real risks, what does the future actually hold? Well, one thing's for sure. CAMS is not just sitting back and relaxing. They are actively positioning themselves for the next big wave in financial technology. And that wave has a name we're all hearing a lot about: artificial intelligence. CAMS is making a huge strategic push into AI, and for them, this is way more than just a buzzword. They're using it in two really smart ways. First, to make their own operations more efficient and cut costs, and second, to build new, smarter solutions for their clients and for you, the investor. They see AI as the next evolution of the financial infrastructure they've spent decades building.
Which really leaves us with one final, fascinating question to ponder. We all know India's financial markets are projected to grow massively, attracting trillions more in assets over the coming years. So the question is, will the company that provides the essential, unbreakable plumbing for that entire system ultimately become one of its most valuable and enduring assets? It's definitely something to think about.